Hi and welcome to the market alert for Thursday the 4th of January 2024. So global bonds and stocks suffer biggest rout to the start of the year since 1999, so it's all going pear-shaped. Stocks slip, Bitcoin slides and crude rips higher, so the reversal of what we saw on Tuesday. And economic news today, well, we've got the German prelim CPI, and we've got ADP, obviously the precursor for tomorrow's non-farm payrolls and unemployment claims as well. They will be out tomorrow at 1:30. There's the non-farm numbers. They're forecast to be lower than the 199 from the previous at 168. Right, let's have a look at the markets and kick off with the Dow. So in the Dow, down day yesterday, after struggling on Monday as well. We've got a bit of demand coming into the market, but it looks like we're due for the correction. It's been a long time coming, this, but of course it's bonus season, or was bonus season, so they wanted to keep the markets moving to the upside. They do that through Christmas. No great shakes. Nobody wants to have a Christmas ruined by any major correction in the market, but these are the downside targets. Now everyone's back at work and things are back to normal. For the Dow there's the downside targets, plus you've got the 20 bar moving average in the way there, but there's a bit of demand there, so you could get a bit of a bounce today. Yesterday again we saw the decline in stocks of 300 points once more, but then again the bounces. You would think this was yesterday's alert that we're looking at here with the way the market bounced. Market off overnight, testing the low there, but at the moment above the close and trying to make its way back. Like I say, there's demand in the daily chart. Doesn't mean to say it will hold, but one of the biggest volume bars we've seen for some time there. German DAX also down, bit of demand there as well for yesterday. Let's have a look at the retracements from the recent low to the recent high. You can see there we're at 50%. This will need to hold. Get rid of the 38 there. Below this we've got some more support to the left there. The 50 EMA tying in with the 62% retracement as well. On the upside, just in case we get a bit of a bounce from the high there to the low there, these are some of the upside targets you could expect the market to test. Those ADP numbers will play a part today for this market. In the 30-minute chart, again, you can see a decline there of 200 points there for the Dow. Or just over, probably 250 points actually for the for the DAX, with a bit of a bounce, and then overnight the market retracing but not testing the low. Maybe tested before we get any sort of move to the upside there. Also the market trying to get above the 5 bar moving average and the 20 bar there as well. In the S&P 500 also still in decline, having failed to get to the all-time high. However, the market is back to 89% retracement there. Let me just zoom out on this so we can see a bit more. You can see there we're back to 89%. The market will need to hold this level. If not, it is likely to retest the low to the left, which is, just drag this across and you'll see there, those are the sort of levels that you want to see hold in the S&P. So we're heading into the non-farm payrolls tomorrow. I got that demand there, selling from Tuesday, Wednesday, the market showing that demand. 30-minute chart, again, decline in the electronic cash markets, a lot more choppy there. In the FTSE 100 also down, but managing to bounce back yesterday. So what does the 30-minute look like? Well, we had a decline, and then let's say we had the bounce back, and the market now moving lower. A lot further away from the low than the S&P, the Dow there for sure, and the DAX also. So just holding nicely there at the moment. Still below the averages though. We need to take out the DP if it is going to move back to the upside. In the US dollar, moving higher once more again yesterday, gave them the opportunity to slam the metals, despite the fact that the dollar is a very, very small move compared to what happened on Tuesday. But the metals got absolutely hammered yesterday, so let's have a look at those. So starting off with silver, as I said before, we marked up 22.50. That's where it's going, and beyond, way down. This is going to be continually pressured to the downside. Like I say, it's the manipulation par excellence now. Just look at that for yesterday. Down nearly $1 yesterday. Market sideways, got to stay above the low. It won't, and prices to move lower. The same for gold. You can see the pullback in gold yesterday as well, but not as severe as that we've seen in silver. But again, you can see the decline there, selling the market off. Bit of a bounce in Asia, but it needs to close above the DP, whether that will hold or not. So let's have a look at the gold-silver ratio. And you can see we're through that resistance, what I spoke about in yesterday's market alert. 92 is the upside target. Let me just bring this across for you. There's your 92 in here. So that's where we're heading for. And then once we get beyond this, we get into the realms of 96 and then 100, which the market is likely to do this year. There's the high of 2020, which will be 4 years ago. Hard to believe already that we're that far down the road from the COVID nonsense. Yeah, so 88 is where we're at the moment, heading for 90. So we've got that other one in between there, and then 96. Let's have a look at yesterday's basic trades. So yesterday, market started up choppy, tried to go long once more, failed, was taken out, and then the market went into decline as the US futures sold off there. It was quiet, and then all of a sudden got busy. The market just continuing to move lower, as can be seen there. Just as a side note, I am working on improving these signals. Well, have improved them actually in the software. Lots of exciting stuff to come with regard to this. Spent most of the Christmas in between family events and whatever working on this while it was quiet, and hopefully we'll have something shortly as an update with regard to this, at least to show you something visually what's happening, so that we can actually take advantage of these moves. We'll no longer miss out on or waiting for the volatility to be at the right level. So some good news there. Been working on it for a while, but now it's starting to really take shape. So let's just move on to the afternoon. The market waiting for the news there. News comes out, market then sideways, and then we get a bit of a bounce into the close, which you can see there up to the target and the 50 EMA, where the market then starts to trade sideways once more. So a bit of a help to recover some of the losses from the morning. But like I say, these big moves that you see in this chart, whether it's morning, mid-morning or whatever, you will no longer miss out on those, because it actually finds the way the trend is trading and then follows the trend. So like I say, just be patient. It is en route just to, like I say, too many trades missed. So I found a way that we can take advantage of these declines and rises and stay in them for the longer term as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.